Make large crypto trades with Kraken OTC, execute orders of more than 100,000 off the open exchange through our premium OTC trading service. Get 24/7 access to deep liquidity, minimal slippage, and competitive execution and settlement services. Private and secure trading options include chatting securely with our trade desk for a personalized high-touch service, or use our self-service RFQ for super fast, automated OTC trading. Non-investment advice. Crypto trading involves risk of loss and is offered to U.S. customers through Payward Interactive Inc. For more information, go to realvision.com/Kraken OTC.
Hey everyone, look, sorry, this is the cheesy interruption that you get on YouTube channels, but they're really important. I'd really appreciate it if you just hit the subscribe button. You see, it makes a difference to know how I'm doing, seeing the growth in subscribers, if we're getting the right content. Obviously, comments help as well. But hitting the subscribe button allows me also to book the best guests. It really does make a difference. So if you do enjoy this content, and I know you do because you keep coming back to watch it, just please hit the subscribe button. Sorry again for the cheese, but it is important. I appreciate it so much. Take care.
I think we're in that transition from macro crypto spring into macro crypto summer. The transition here is usually when the forces are still disinflationary and growth is slow to picking up. That is like macro utopia. That tends to push the central banks and the governments to adding liquidity. So the crypto summer starts around now. It also forms the basis of the banana zone. And that's when things start to get really crazy. So that's where we are in the cycle now. So we're just in that zone of, we've got this beautiful chart pattern that is just consolidating. It's only a matter of time now before we start to see the next move. And that's also likely to coincide with some other liquidity things.
Hey everyone, we've got a great conversation coming up here with Raoul. But before we get into that, I just want to make a quick plug for the new On the Margin newsletter that we just launched recently. It's a free newsletter. I write for it regularly, and it covers the intersection of crypto and macro and how they intersect, which is a lot of what we talk about in this interview. It's free, so go check it out. The link is in the description below, and I'd really appreciate it. All right, let's get back to the show.
Hey everyone, this episode is brought to you by Mantra, the security-first, compliance-focused L1, which is onboarding the next wave of financial institutions. You're going to be hearing all about them later in the show, but for now, Mantra, thanks for making this episode possible.
Welcome back to another episode of On the Margin, and joining us today is Raoul of founder CEO of Real Vision and the Banana Zone master. How's it going, Raoul? Great to have you here.
It's good to be here. Thanks. I can't believe I now own the Banana Zone.
I know. And I love that you're just leaning into it and rolling with it, because it's just, when those things start going, you just got to go with it.
I've collected in my Twitter bookmarked all the banana memes that people have sent me. So I just fucking hope it works.
Likewise. Well, I have a feeling that it will, but we'll dig into that some more. But yeah, it sounds like you've managed to avoid the hurricane that's about to hit you, and you're in Miami now, right? Yeah,
I'm in Miami. This is recorded on Tuesday, so on Wednesday or Thursday it'll hit. We don't know if it's going to hit the island or not, but it's never know. I had to leave the dog behind with the housekeeper, and some friends are staying in the house. Just category 5, you don't know. I mean, that's total devastation.
That's scary. Well, I'm hoping for the best over there.
Yeah.
But let's get into it. I'd love to just hear a bit about, where we're at and where you view us in terms of this liquidity cycle from a pretty global macro view. And then we can go into some of the specifics of that's implications on, crypto markets and what you're seeing there. But we'd love to just get a bit of a state of play of where you think we're at right now.
Yeah. So as I've been talking about for a while, I think we're in that transition from macro crypto spring into macro crypto summer. Now, people confuse it with the actual season itself. I just saw that on Twitter. I'm like, no. It's because it breaks down to 4 periods of the liquidity cycle that drives assets. So the transition here is usually when the forces are still disinflationary and growth is slow to picking up. That is like macro utopia. Why? Because that tends to push the central banks into adding liquidity and the governments to adding liquidity. It also happens to be, this everything code cycle is also about the election cycle. And guess what politicians do at this time as well? They want to give candy to the kids. So they're stimulating as well and tend to stimulate into the following year as well. So that particular juncture of the macro starting to pick up, the ISM survey is still below 50. So it's still sluggish. The forward-looking indicators are all very positive, and liquidity has been positive for a while. That pickup, if you think of it, we've had a Wall Street recovery, which is liquidity. Main Street recovery is yet to happen. Main Street is when earnings go up, and all of our earnings go up, and there's a bit more money around. That's when the flows from all of these earnings start going into markets as well. So it's not just liquidity and debasement driving things, it gets driven by actual investment money, which has been actually quite lacking in many respects. So that's typical of the crypto summer. So the crypto summer starts around now. It also forms the basis of the banana zone. And that's when things start to get really crazy. If we go back and look at all of these, since about 2008, they've all done roughly the same thing, which is presidential election cycle. It kind of has a sell-off into the summer, then it tends to accelerate sideways over the election because everyone doesn't know what it means, and then it's all over, markets rip. Whatever the outcome, a shock, expected result doesn't matter. And so that election cycle has been very prevalent both in equities and in crypto. So that's where we are in the cycle now. So we're just in that zone of, we've got this beautiful chart pattern that is just consolidating. The stuff that has less network traction or network adoption has fallen significantly, but we're starting to see the recovery. So I think it's only a matter of time now before we start to see the next move. And that's also likely to coincide with some other liquidity things. I think the Japanese have to intervene with the blessing of the Fed, because that's going to help the Chinese, the Japanese, everybody's business cycle. That has to come because the US dollar is far too strong for this point in the cycle. The other thing that needs to happen alongside that is the Fed absolutely have to cut. And I saw you talking on Twitter today. Look, inflation, the true inflation numbers at 1.82. Core CPI is now headed lower sharply, but rates are at 5.5. It makes no sense considering the lag that it has. If not, they're going to undershoot inflation, which I don't think they mind, because you can refi debt at lower levels because they put everything at the short end right now. Janet Yellen's been issuing short end debt, so the lower she gets rates down, the more she can get back into the 4-year cycle.
One thing that I wanted to ask you about is, I know a lot of the work that you do is looking at how ISMs lead other liquidity indicators that you look at. And one thing I'm trying to figure out is, if ISMs are going to accelerate, to me that feels like something that would be at, say, not at a time in the monetary cycle where they would be easing, because the economy would be accelerating higher. But I know you've been talking about this idea of refinancing cycles and how it's a different game now. So you're saying that you see easing at the same time that we see this acceleration in the economy, right? How do you square those two?
The Fed only operate on two things: unemployment and inflation. Both of those lag the business cycle itself. So unemployment, owner equivalent rents, part of CPI, which is the large part of it, all of that stuff lags by 15 to 18 months. So even where the ISM today is bottoming, that means that doesn't bottom until next year sometime, which is why the Fed are always cutting into the second year, because they're following the lagging indicators, the things that drive down CPI, which is why they're always late tightening. Unemployment, well, you're at the point in the cycle where unemployment ticks up. I don't expect a big tick up, but 4.5 through to maybe upside of 5% unemployment. Well, if you think of how lagging unemployment is, it's about 12 months lagged. So again, that keeps the Fed cutting, even though the business cycle is going to start gaining strength. So you'll have a weird world, and it happens at every single cycle, where the ISM's at 55 and the Fed is still cutting like crazy. And everyone's like, what the hell is going on?
Yeah.
It's because they just follow those two indicators and they're both lagging.
Mm-hmm.
And we live, in Global Macro Investor, Julian Battelle and myself, we live in the future by 9 months because we use financial conditions, and financial conditions lead the ISM. And it's been screaming higher for a while.
It sounds like both of us agree that for the most part they should be cutting right now. Do you think there's a risk of them doing this classic thing where they, end up misstepping right at the turn and end up cutting too late? Or do you think they're still on track to be on time here?
I think they could have gone earlier, because a lot of this was baked in the cake a while ago. If you look at the forward-looking indicators, they've all been disinflating for ages. Don't assume central banks are stupid. That's a lesson I've learned. Assume that they know what they've got to do. If the game is, we need to roll $10 trillion of debt this year, and the Europeans have to, and the Chinese have to, and the Japanese have to, and everybody else, the best single thing would be to lock that in for another 4 years at the lowest possible rates. So it's kind of like, maybe there is a game here, which is to undershoot. I've observed that they're all in cahoots with each other, all of the central banks plus all of the governments. So there's no independence of central banks. They're all working together. You can see how Janet Yellen and Jay Powell operating the TGA, the reverse repo, they're completely working together. Same in Japan, same in China, same in Europe. Everybody's doing the same thing. So I kind of think if they're doing it late, they're doing it on purpose because they're not stupid. They can see the same models. What? My work is better than all of the people at the Fed? No, they're choosing to do it for a reason.
Yeah, I think that's a super important lesson to have. The big question is, I agree that, these central banks are all talking to each other all the time. But as you mentioned earlier in your conversation, they're talking about what's been going on with the yen. And something I try to figure out is what matters more, domestic interests or international interests? Because as you mentioned, we've seen the yen jump over 161. The best way to solve that issue right now is for the Fed to ease, but we're seeing them be a bit slower on there. So I'm curious what you think about how much they, when the rubber meets the road, which side do they care about most, the global interest or the domestic?
I think they're all the same thing. I noticed that Yellen went to China twice, right? Well, what's she doing in China? It's something to do with their debt refinancing cycle because they need dollars, because their entire property sector is a dollar borrower, right? So they've got a dollar shortage. There's a global dollar shortage going on. It started Silicon Valley Bank, all of that, rolls into Credit Suisse, blows out. Credit Suisse, big part of the Eurodollar market. Then the Japanese banks, they're the epicenter of the Eurodollar market. What's happening is they're starved of dollars. So dollar yen starts falling. And then Yellen goes to China twice. So Yellen needs to orchestrate this little dance. The dance is using Japan to scare the Chinese to do something. The Chinese don't want to devalue. Janet doesn't want to lend directly to the Chinese in swap lines. So she's going to backdoor it via the Japanese banks by getting the Japanese to intervene. That's how I think it plays out. The Chinese, on the other hand, will have agreed the other thing because Janet is the world's largest junk bond saleswoman and she needs them to buy bonds.
Yeah.
So she's like, I will get you the liquidity. We understand the Eurodollar market is in supply shortage. We will give you the liquidity via different routes. You will add to your treasuries. We can all go away. And then we've seen the trade deals trying to happen where they're trying to say, listen, the US can't run such a big deficit. Everyone has to kind of realign here or we won't get enough growth. Everybody needs that growth. A weaker dollar is the mechanism for the world to grow. Every business cycle, upcycle, is all about a weak dollar cycle. It sloshes money into emerging markets. China desperately needs it. The US needs to export goods and have people buying them. Chinese won't buy any goods because they're in a recession, essentially. It's all of this dance at the bottom of the business cycle. Feels like it's going to get resolved. And the only way I think it gets properly resolved is the Fed need to cut, lower the interest differential, kind of shock the market, maybe July. I think you mentioned it on Twitter today. I have a tendency to think July or a strong signal it's coming.
That's what I thought too. And, right now it looks like that may not be the case. I was waiting to see if Powell would hint at that today, but it didn't seem to be the case. But I do agree, yeah.
And then give the Japanese unlimited amounts to intervene.
Mm-hmm.
And we've seen that 2 or 3 times, almost every cycle, the Japanese have had to intervene in their currency markets. And then what you see is the dollar fall sharply. That ignites world growth. Everybody's, it's a much better situation.
Yeah.
The US have enjoyed the strong dollar in one respect, which is lowered inflation, but it lowers exports, which is why they're running a large deficit. So I think everybody knows the game that needs to be played. And that's why Yellen was in China for no other reason.
Hey everyone, this episode is brought to you by Mantra, the security-first, compliance-focused L1, which is onboarding the next wave of financial institutions into Web3. So you guys have heard me talk about Larry Fink talking about tokenization. You've seen the clips on CNBC. You know that Larry and BlackRock are very, very excited about this idea. And the reason for that is they're looking at these trillions of dollars of off-chain real-world assets. They want to digitize those and bring them on-chain, which is going to be a massive opportunity. But in order to do that, they need a compliant L1, and that's where Mantra comes in. Mantra's been steadily climbing the ranks and now stands among the top 4 RWA projects on CoinGecko. which is representative of its rapid growth and influence in the tokenization space. Mantra is built using the Cosmos SDK, so they have some very cool stuff out of the box. They've got IBC interoperability. They also leverage CosmWasm smart contracts. Very cool design from an architectural standpoint. The next phase on the blockchain's testnet is Hongbai, so that's launching soon. So if you're a dApp developer or something like that, there's a lot of very cool opportunities for you, and I highly recommend that you click the link at the bottom of the show notes. That'll know that I sent you. Thanks very much again, Mantra, for making this possible. And again, guys, click the link at the bottom of the show notes.
Hey, everyone. Listen, if you want to unfuck your future, let me help you. Follow this channel, subscribe, click the notifications, and you'll get everything as soon as it comes out. See you there.
I want to ask you something. I've heard you explain many times outright yield curve control. And, it's where you just say, okay, we're going to cap the 10-year at this certain percentage point. But when I look at everything we're talking about, we have all the dynamics you mentioned. We have, like you said, Yellen is just, issuing the crap out of bills. There's treasury buybacks happening. Powell's cutting QT. It feels to me when BTFP, when you add all these things together, it feels like a version of yield curve control. Do you agree with that?
They are all just financial repression. They're all the same thing by different names.
Yeah.
The next thing that's going to happen, which is the same thing, is Basel IV, which comes next year, which is bank regulation forcing the European, the UK, US to own more bonds. Oh, how convenient. You force people to own bonds. The new Freddie Mac ruling that's went through Congress that allows them to have second mortgages, home equity release mortgages. It's a big deal because it's guaranteed by the government essentially. And there's probably 5 trillion or so that can get released. Now, what does that mean? Well, the way that they hedge the mortgages is by bonds. So these are all forms of yield curve control or quantitative easing by different regards. Quantitative easing doesn't matter the price, we'll just buy as many bonds as possible. Yield curve control is we don't care about the quantity, we just care about the price. They're just basically both the same thing, which is, it's just a debasement of currency.
How do you deal with that dynamic in terms of asset allocation? Because, I remember years ago when, you're more actively trading like macro specific, trades, like still trading bonds and that sort of thing. But I know you've moved a lot more to this exponential age style of investment. And with that, it seemed like you had this bit of a shift in your perception of the world from being one of being more, cynical about a lot of these things to being, I would say you're one of the biggest optimists in macro. And, there's not that many optimists out there. So it's great to see. So I'm curious about what that process has looked like. Do you still trade anything in that native macro world? Or are you just using that as a framework to apply to what you're doing in these other aspects, or what?
I don't trade anything in macro really anymore. My personal portfolio is pretty much, it's 100% crypto. Within Global Macro Investor and Real Vision Pro Macro, there are some technology bets and other bits and pieces around that because it's all part of the same trade. What I found over this process was that everybody in macro had been struggling for about 10 years. The odd trade came along, like the buy bonds where diamonds trade. You can make a ton of money on it. But people were struggling because we didn't understand the world. Equities just kept going up and we just couldn't get our teeth into anything because we weren't looking at the right thing. There was a mega trend going on, which was this liquidity cycle. And once you saw it, you realized that everything was correlated to it. So if everything is correlated to it, then it becomes interesting to say, okay, well then, if it's all the same trade, what's the best performing asset? Now, the other really important thing, what I think has happened, and it took me too long to realize this, I'm annoyed at myself, is that the Federal Reserve and all the central banks took away left tail risk. Left tail risk in a global macro view really is a debt deflation, which is when the value of your collateral falls too much that you can't pay for the debts and it gets called upon. And people sell the collateral and you get into this cycle. We had that in 2008. What did they do? Debase the currency. What did it do? Optically make asset prices rise, so the collateral went up. The Europeans did it even harder in 2012. So what they've said, and then we did it again in COVID. So what they've said is, you cannot have a debt deflation. We will not allow it. And we will debase the currency by 8% a year to pay for it. Think of that as a put option that you're paying on the system not blowing up, which is a very different way of looking at it, as opposed to, I can't believe they're robbing me of 8%. If you say, hey, listen, it's a mutualized cost of a put option, and we all pay 8% so the whole system doesn't blow up. Okay, So if we've taken away the left tail and everything is correlated on this debt refi cycle, and they have to debase currency over time to do it, well, this may well be the best macro risk-taking opportunity of all time. Mm-hmm. And then when you just break it all down, what I did simply was divided all of the main assets by the global liquidity, or even the Fed balance sheet, whatever measure you want to use, M2 doesn't really matter. Nothing else goes up except the NASDAQ and crypto. Mm-hmm. And the NASDAQ since 2011 has done 17% a year returns, and Bitcoin's done 150. So you're like, holy shit. Okay, it kind of makes a mockery of anything else you invest in. Everything becomes suboptimal. So then people go, yeah, but what about the risk return, the volatility? That 150% return is after 3 80% drawdowns. They're included in that number.
The Sharpe ratio on Bitcoin is like ridiculous.
Oh, and the longer time horizon you take it, the more ridiculous it is. It's an alien asset class. We've never had anything like this. So I got to the realization too late that there is only one trade. And people hate it. People hate the fact that there's one trade and it's a new asset class. And they want it to return to the old days. They want to trade oil and they want to trade dollar yen and they want to trade. I'm like, it's all irrelevant. If our job as investors is to maximize our profits or protect our wealth, okay, wealth preservation may be marginally different, but if we're profit maximizers, then you owe it to yourself, because if not, every other trade is suboptimal, because there's no benefits of diversification, zero.
Yeah, I want to get into your specific theses around exponential assets and crypto in a minute, but before we do, I want to ask you, where does this refinancing cycle end up? Do we just do it in perpetuity, or do we do it until maybe the debt GDP levels get lower? Or, what's that inflection point? How long does this go for, you think?
So what we're using all the available GDP to service the private sector debts. So the private sector is about 100% of GDP in debt. GDP, and let's say interest rates on average have been about 2%. And trend rate of GDP growth in the US is 1.75%. So basically all of the new business of the economy is servicing debts. So the government's 100% of GDP in debt. So where does that go? Well, that gets monetized. And I can't remember your question, but it was, where does it go?
Just okay, how long does that go on for? Yeah.
So the only way with an aging population, so GDP growth is driven by a magic formula. It's really simple, and every economist forgets it just in the mid-curving of being an economist. It's like GDP growth is driven by population growth plus productivity growth plus debt growth. Debt growth is robbing from the future. We blew that up in 2008. All debt growth now is just servicing of old debts. So population growth, productivity growth. Population growth, well, you can extrapolate that into the future. There is no population growth in the Western world. It is just shrinking and shrinking and shrinking. We've got a demographic time bomb that we know. Okay, so how do we get GDP when it gets worse and worse and worse every year? Productivity has been terrible too. Why? Because old people aren't very productive. No shit. It's not difficult to figure this out. And then you peer into the future and say, okay, how do we stop this dynamic? Because if this continues, this whole thing continues in this weird world of debasement and cycles and all of that. And really, it's about technology. It's about the AI and the robots are infinite population. People don't get it yet, but like Amazon has gone from 250,000 robots in 3 years to 750,000 robots. Soon it'll be got past the workforce of Amazon itself in human terms, and these things are 3 to 10 times more productive. So we are replacing an aging human workforce with infinite AI and robots. So what that does is makes a mockery of that magic formula. What, we can have infinite population? Well, the other side of that is, okay, well, infinite robots and AI means an infinite use of electricity and compute. So compute, everybody's solving the electricity side. Well, that is productivity. And productivity, again, I love the mid-curve take of spin to it. It's like the Europeans have no fucking clue what they're doing. They're throwing money at this stupid green energy narrative. They completely understand what they are doing is forcing down the cost of capital into innovation in lowering the cost of electricity. Because fossil fuels over the years, basically, electricity costs have been stable. We haven't really made much progress with that. But we've seen the Moore's law working in EV and solar and in wind and in geothermal and eventually in nuclear. We've got more than enough energy. It just takes time and investment in technology for storage and distribution and all of that. So the Europeans are pouring money in. People don't realize the Chinese have been doing even more. The Chinese, 40% of their entire car fleet is now electric. And so they're all forcing down the cost of energy. So think of the magic formula. You're about to increase population infinitely, and you're about to, over the next 10 years, drop the cost of electricity by 75%. That multiplier is bananas. That you don't need anything else to solve this. Now, we had the same situation in the 1950s, coming out of World War II. We had the crash of 29, which was basically 2008. World War II, let's use the pandemic. Everybody comes back into the workforce. We get the inflation, all of that story. But really what they did was yield curve control and then let productivity pick it up. Now, they didn't need the robots because what do they have? They had the baby boom generation.
Yeah.
They all got born in 1950. It's like us, but birthing the robots now, right? And the AI, it's the same thing. It was like a 30% increase in the global population happened. Well, no shit. It all worked out because GDP picked up, productivity picked up, and the world was solved. We're going to do exactly the same rule book now.
Yeah. So basically, it sounds like you view debt as, and debt monetizing as basically being this bridging point to get us to that point. It'll allow us to keep society afloat and allow us to do the CapEx investments required to get to that point.
Exactly. Because the alternative that FinTwit would love to scream to you about is they should get out of the way and let it all burn. Nobody has a comprehension of that mean when the world is 350% of GDP in debt. What exactly does that mean? Does that mean we go back to the dark ages? Does that mean we break all global trade? Nobody's going to do that. And I kind of understand. If there's an 8% cost of not doing that, I'll take that. Using the everything code, I know where to invest and I can offset that cost, and that's fine.
Yeah. I mean, I get it, as I'm obviously, around 30 years old. And so my generation's trying to figure out, okay, how the hell do I buy a house? Right. And, so you see all these things going on and, I'm in Canada, like I was saying, so here it's like especially bad because
it's even worse.
Created this real estate Ponzi. And so now like none of my generation can own a house. And we want to hear them talk about bringing down housing prices, but at the same time, everybody's leveraged the shit out of their house to fund their life. So again, there's issues to it. So then you're left frustrated and figuring out what to do. I think that's where your thesis of crypto and exponential assets comes in, right? That's
you see, in debasement cycle, the problem is scarce assets go up because of the debasement, but variable income doesn't. It goes with GDP. So your salary, yes, you're 30, so your earnings go up over time, but generally speaking, offset for that, wages go with GDP. Of course they do. And if GDP is slow, wage growth is slow. So what's happening is everybody's getting poorer. And in countries, the two worst for it are Australia and Canada, where you jammed in huge influx of immigrants with a lot of capital and a big pension system, you drive up the cost of real estate. So that's what's happened. So nobody will ever get ahead. This is exactly the same mechanism that people don't understand, which is price earnings ratios keep going up. It was like, it's all overvalued, it's a bubble. No, that's variable, and that goes with GDP, and that's fixed because P is driven by debasement. So they're going to keep going up. It's a perfect trend.
Hello, listeners of On the Margin. I've got good news for those of you who are in the crypto scene. Blockworks is bringing back Permissionless. We're going to be doing Permissionless 3, and this year we are heading west. So we're moving that out to Salt Lake City. That's going to be October 9th through 11th this year. We've got a phenomenal lineup of speakers for you. So we've got Balaji headlining. We've got Sriram, Munib, Matt Hogan of Bitwise, Jan Van Eck. This one's going to be a blast, guys. And I saw many of you out in London for DAS this year, and I hope to see you out in Salt Lake for Permissionless. And because y'all are such faithful listeners, if you use code MARGIN10, you're going to get 10% off your tickets. Appreciate you all. Hope to see you out there.
That sets you up nicely for, again, your thesis of crypto. Where do you stand on that these days? And I'd love for you to separate your views on what do you think is a really good risk reward trade, and what do you think, maybe philosophically on some of these assets itself? Because, I know you went through your journey originally through Bitcoin, and then, Ethereum. deep in the Solana ecosystem now, and there's a lot of opportunities there.
I'm going to put it differently in a way that I've started to try and communicate with people to understand this. And this is very pertinent to you. You know, if we're trying to take the 30-year-old as the demographic, the 30s to 35, and it's global, right? So what we've got here is a global utility, which is blockchain, much like the internet was. Now, unlike any of these global utility networks, trains, road systems, all of this, you couldn't invest in them. But because this is tokenized, you've got a behavioral incentive system to grow the network, which is the more people come onto the network, the more the number go up, the more people come on the network. And therefore, the more capital in the network, the more applications get built, the more the network gets used, right? It's fucking genius. And we've never seen anything like this, where we're all part of it. So here we've got this asset class, which is a globally homogenous asset, which doesn't exist. Gold is the only one. But gold, if you go to a village in India, the bid-offer spread is 50%. Here we've got tradable on a mobile phone in India, the Philippines, Fiji, New York, Vancouver, the Cayman Islands, the same thing. And it happens to be the infrastructure layer to the internet for the system, for value and storage. And it's that distributed database, which is a public service utility good. Okay, brilliant. It's a $2.5 trillion market cap today. If we just extrapolate out the trend rate of growth, it gets to $100 trillion by about 2032. Okay, so this is the biggest wealth generating opportunity in all human history. So you've got this in front of you, which is this whole how to unfuck my future. Part of it is this. The other thing is don't fuck this up. Never get thrown off this horse, because this is the big one. This is the greatest macro gift of all time to get everybody out of this shit that they're in. So it's there in front of you. So then people are like, yeah, but what do I invest in? I'm like, okay, listen, detune all the noise. There's a bunch of decentralized businesses that sell block space. And they all have different types of block space. One's going, hey, mine's the most secure and the oldest. Somebody else is like, well, mine's the internet computer. And somebody's like, mine's the internet computer, but faster. They're just selling block space. So there's a bunch of companies selling block space or applications on top of that block space. That's all the space is. It's just a technology and it's an adoption. So our job within this is now not get philosophical and tribal about where do I invest in that technology and screw it up. Our job is to maximize the opportunity to the best we can. And that's a balance of how do you take risk? Because a lot of people go, max 10 risk. Like, no.
Yeah.
Look, if it's going for $2.5 trillion to 100 trillion, you don't need to take max risk. You can just capture the bulk and then do a bit of the tail on the side.
Yeah. And I think that's something that a lot of people miss. And I know that, some people give you a lot of shit sometimes for just not understanding time horizons and position sizing. I would love to just hear a bit more about those two and just like how you deal with that never-ending circle of like, oh, Raoul Pal's max long whiff or something, because he's not. He's managing his risk and his time horizons.
And I try and communicate it, but people don't want to hear it is the point, right? This is a narrative-driven attention space. And so they just want what they can do. I made it very clear all the way through, hey, 90% of my liquid net worth is basically allocated right now to Solana. I moved some from ETH. I don't have much Bitcoin right now. Doesn't mean I don't like Bitcoin. I just think the others go up more. Simple as that. I own a bunch of high-end NFTs that I think I have another thesis about. And then beyond that, I do a bit of speculation and other stuff, but the fun of it. But the time horizon thing is, I can see it freaks everybody out. And I've stepped back, and it was only in the last 2 weeks I've realized the risk, the real thing that's going on crypto Twitter, and why the banana zone resonates and why you get this backlash is this is everybody's hopes and dreams. It's everybody. It's yours, it's mine, it's everybody's. Right, so they're so scared of it going wrong, yet they're so greedy to get it right. This is the struggle that everybody's having. Mm-hmm. And people have PTSD from the last cycle, as the people did from the previous cycle. Right, the previous cycle was the blow off top and then the collapse. This one was the stunted top and then the collapse. And so now people, they worry about the cycle. Mm-hmm. I don't remember Jeff Bezos caring about the business cycle. He just owned his stock. If you're in a secular bull market, there is demand for the good that you produce, in this case, block space, premium block space, then motherfucker, you're trading it. What you should do is buy all the sell-offs. If it goes down 85%, you're like, hell yes. It took me a long time to realize that, because I too was the macro kind of cyclical guy. And I think, well, let's sell it at the top. So I think I can predict somewhat the tops from the everything code cycle and the usual bunch of stuff. But does it really matter? As a 30-year-old, yeah, okay, you might want a house. So there's lifestyle chips. Okay, fine. But I tell you, if you've made a ton of money and you take it off at the high and you nail it, you will not put the same amount back in at the low, down 85%. When everybody's calling you a criminal, they're going to shoot everybody involved in crypto. There's going to be the gulags for crypto investors. You're like, I'm not doing it. And you will end up screwing the whole thing up. The other one I was talking to Chris Boniski about is people are really getting concerned about, where does the top come? Is it early? Is it normal? Is it, every time it's always been December, but for some reason everyone's freaked out it's going to be a different time now. Okay, fine. And that's because of PTSD. But it's not that. I don't know. We don't know. None of us know. Is it going to be a bubble top? Is it going to be, it doesn't matter. What is the one that scares me is what happens if the correction in 2026, because we don't have 22, we don't have it, beating out of massive inflation and the pandemic stuff. Imagine if we just only went down 40% in Bitcoin and 20% in NASDAQ. This is kind of my favorite probability. Sure, there's a whole bunch of alts that are going to go down 99%. I'm just talking about Bitcoin. Everybody's going to miss the trade because they're waiting for the down 70.
Yeah. Do you think ETFs play a big part in that suppression of vol, or at least like providing a floor to it?
Yeah, I think so. I think younger people in the US can use their 401ks and dollar cost average on a 2 weekly basis, and they do that a lot. So I think that helps. It's not fully in swing yet. I also think that the ability options probably out by then. That probably dampens volatility, and just maturity and understanding of what the network is. That next time around it won't be. It's all a scam. It'll be the business cycle liquidity. Much like it. I mean, I can't see a big crash in the NASDAQ. Not with this unbelievable kind of mega trend of AI, compute, EV, robotics, all of that stuff. So a lot of them, if you go back to all of these business cycles since 2008, most of them have had stuff like the NASDAQ trading down 20%, down 25% for a year. It's boring. And I think that feels like, because the super narrative of all these technologies coming together is so big, and the capital, that it feels like that the biggest risk is it doesn't go down a lot.
Yeah. It's really interesting that the cynicism, and like it feels like this cycle nobody really believes in the tech anymore. And part of that is valid based off like what happened last time with there's a lot of vaporous claims and accusations, and suddenly it's just like, oh, okay, it's just a way for VCs to get their unlocks. I know you're pretty deep in the world. You have a fund of funds, and you're looking in that space, sort of in an indirect way. How do we fix that sentiment? Is it just time? And is there any other ways to manage it other than what you mentioned about just not trying to nail tops and bottoms and just ride the exponential waves?
The sentiment has always been that ICOs had the same. Everybody in the last cycle had PTSD over ICOs. Meanwhile, stable coins are getting adopted by the fucking EU. I mean, the adoption of blockchain technology is undeniable. People, this go back to time horizon. They expect it all tomorrow. Why hasn't Google gone to a Web3 business and Meta? And why is the entire financial system not on new blockchain rails by the end of this week on my blockchain? I'm like, it doesn't work like that. It's all at the margin until it's exponential. So I just think it's a time horizon issue, and people are new to this kind of stuff of understanding both exponentials and long duration assets. But when I look back at my first Bitcoin investment at 200, I mean, what a different world. 200, but you didn't see it then. It's very difficult to see because of exponentials.
Do you still think there's a space for something like Bitcoin? Because I mean, as you mentioned, like it's great and all, but there's other things to get into that'll probably have a way better risk-adjusted performance. But Like, where do you think that, like, I know you talked a bit about sometimes it being like this, like, sovereign collateral, that's just like immutable and just there. Do you still think there's something like that for the world? Maybe
Yeah,
as like
I do.
sovereign collateral? Yeah,
I do. But, pristine collateral is not likely to be the best performing asset.
totally.
The safest asset is never the best performing. It's simple. There's a risk curve.
Yeah.
Now, it has performed very well this cycle, but it always does at the beginning of the cycle. So, yes, I do think the Bitcoin business of selling their block space is pretty robust, particularly in a world of debasement of currency and sovereigns understand the game. So I do think it gets adopted more and more and more. It doesn't do anything else, really. Yes, we're trying to build rooms and ordinals and other stuff, but really it just does what it says on the tin. And that works really well. It's an anti-debasement machine that has adoption effects. So I do think that Bitcoin holds its narrative, but over time its dominance falls, just as the space gets bigger.
It's July 2nd. We've mentioned this whole bit of banana zone, I think, a couple times. I would love for you to just explain that for those that may not know what we're talking about, and then how that relates to where you think we are right now in terms of price, cycle, etc.
So Julian Battelle and myself kind of used the term actually for last quarter last year. We said, hey, listen, liquidity's picking up. The pre-election cycle, it usually goes bananas. And then so we called it banana zones. The front cover of Global Macro Investor was banana zone. And then we started realizing, you know what, the macro summer and macro fall or autumn, that's the massive banana zone. And then you see that beautiful chart of Bitcoin every cycle and it goes vertical. And you're like, well, it just looks like a banana. And the banana zone says everything. It goes bananas. It looks like a banana. It's funny because it's kind of phallic. It's memeable. And so, but as I said, that is the banana is the big yellow candle of our hopes and dreams is all carried into that. And that's the liquidity cycle, the everything code cycle. If you want to use the Bitcoin halving cycle, which I don't really do, but it's all the same thing. It's all there. And this is the point. And it's all held in that yellow fruit.
Which is destined to go higher. Yeah, it makes sense. Do you view that same banana zone for, I know we've been talking a lot about crypto, but you're also looking at those exponential assets, which is basically know, how AI and all that stuff intertwines. I think that's been a really interesting framework when you look at what's been going on with the NASDAQ and market breadth is people have just been pulling their hair apart trying to figure out, oh my God, why is implied correlations are, the lowest ever. Market breadth is at the lowest ever. It's all NVIDIA. But I would love to hear you explain how that actually ties in a lot to what you've been talking about and whether you think that banana zone applies to it as well.
It's all so fucking mid-curve. I mean, I've explained there are two assets in a secular bull market, technology and crypto. Arguably crypto's technology, but that's it. So number go up the most. We've gone through the fastest period of change in technology in all human history. We've just brought into the world infinite human intelligence to the power of whatever. We don't even know to the power of what? The power of 10, the power of 100. We've just replaced humans by robotics. We've got cars that drive themselves. We're able to edit the human gene. We've got just La La Land stuff going on, the book of sci-fi novels. And these are companies with products. We're not even talking about them anymore. These are actually happening. And people want to invest in old stuff because, hey, it's cheap here. You're like, what are you missing? Do you really think anybody cares about your gold mine? Really, when you've got what's going on? Now, that doesn't mean all these stocks go up forever. It doesn't mean they don't go into bubble cycles. It's none of that. But it's like, if you are to choose an asset in a highly correlated world, choose the best performing asset. Let's say you don't trade crypto. You're doing yourself a disservice if you don't own technology. And I can hear people now going, well, he's just a bubble. It's all a bubble. You need real cash flows and real this. It's like,
I think people want to believe you, but they get hung up on fractals of what happened in 2000 and that sort of thing. But I do think people want to believe you. It's just they're like, oh my God, but what if look at all these grifters or what happened to Cisco and all of that. Yeah,
and look what happened to Amazon and Google and Facebook. I mean, it's all mid-curve. And I don't mean that as an insult. We've all been there. It's like once you simplify it all down, stop all of the monkey voices in your head. Stop filter out all of the noise from Twitter. It's like, is tomorrow more digital than today? Yes, no. If yes, continue. It's as simple as that. It's like the world is going to be more digital tomorrow. End of story. So even if you do have a bubble cycle and then a crash, what should you do? You should buy more technology. Why? Because tomorrow's more digital than today.
Well,
I mean, it's really, I've really got it down to the most ridiculously simple theses. And it's embarrassing. I know it's embarrassing because people are like, this guy's a moron. I'm like, I've done, honestly, 35 years of work on this. I think I'm right, but, we'll see.
Well, I've seen it. I mean, like, when you were posting those charts of, say, looking at like, X divided by federal bank balance sheet,
yeah.
people would be like,
People
Raoul Pal, like, that's a spurious correlation. You need to be doing better regressions and all of that. But I mean, I don't know. You can't fight the price action. And so like, it's not just a science, it's also an art. And I think people miss that sometimes.
And also, look, most regression analysis is, do 2 points exactly meet? And do they follow each other, the points? Well, if there's any lag leads, all the regression falls apart. It's like my game. I did this. I went to Oxford University and gave a lecture. I was never smart enough to go to Oxford, but they asked me to come and do a lecture at the finance club or whatever. And I turned up and my speech was, everything they teach you at university about economics is bullshit. And I just showed them, I'm like, okay, so, talk to me about your economics models. And they all have these lovely linear models. I'm like, okay, so here's the chart of GDP. What is the feature of GDP? It's like, ask a child, it goes up and down. Why do none of your models have an up and down business cycle? They're like, oh. I'm like, if a child can see that the NASDAQ is 97.5% correlated with global liquidity, the probability is that it is.
Yeah.
It's that simple.
Totally.
And they go, yeah, but you can have shark attacks versus cornflake sales. I'm like, do you honestly think we're talking about different things here? It's mid-curving it. It's finding, and I think mid-curving it a lot is fear.
Mm-hmm.
It's fear. You kind of go out of your comfort zone and you expose yourself to, listen, I've got something really simple, but very powerful. And people just say, it can't be true.
Mm-hmm.
It can't be true. Now, I'm not the one discovering technology stocks. I'm the moron who discovered them too late. If I'd have just done that earlier in my career, I'd have been a lot wealthier. I was there for the whole internet thing. Missed it all. I was the macro cynic. No, it's a bubble. It's going to mean revert. It's this and that. Wrong. All of it was wrong.
Yeah. How do you, I know it's such a simple question to ask, but like, how do you get comfortable to get to where you've been? Because it's a journey. I've been through that journey too. I was the guy that was thinking about, oh my God, like any day now we're going to get that left tail risk. We're going to get a recession, et cetera, et cetera, et cetera. But eventually you get to this point of more nuanced thinking. And then maybe you get even to being more optimistically thinking. And, there's parts of that I live in both in terms of where you're at. But like, any other tips on how to actually do that? Because it's hard to go through that journey.
Yeah. Change your mindset to look forward to sell-offs. Think, okay, somebody's given you a wealth compounding machine and you get to have a go back. Let's say Bitcoin price goes to 200,000 and it comes back down to 70,000. You get to have another go again. That's a gift. I mean, Anson put it on Twitter and he's dead right. It's like, I cannot believe they give us this gift every 4 years where it becomes the worst performing asset and we get to make another 20, 30, 40x.
Mm-hmm.
And so if you use that mindset to say, hey, I'm in this for the long run. I'm going to stay in this trend probably for the rest of my investing life. I'll take money off and I'll do the normal things, but this is my investing journey now, like you do with your 401k or whatever it is. Then you should be very excited and thinking, how do I hoard as much cash as possible in 2025? So in 2026, you can play Chris Boniski on the internet, which is, he got it dead right. He'd hoarded cash and nailed it. And, I was still scrambling around adding. I mean, I luckily added all the way through, but I didn't have a big cash pile to do it with. I wish I had. Now, people might say, yeah, but that's why you sell out of the top. Don't do that. You can sell some out. But the thing is just buy the discounted prices if you get them, when you get them. And then you don't have to worry about nailing the low because you haven't got the money in the market, all sorts of weird stuff that happens. So it's basically not fearing things. It's looking forward to things. If you face your fear and actually turn it into your friend, it doesn't become a fear anymore. It's a psychological trick that works for every single thing in life. Most people live with their fears. They lie in bed thinking, fuck, am I going to make as much money as I want? Is the banana going to happen? And then am I going to lose it all? Okay, because they're thinking too short term. They're not thinking what it could be. They're not thinking about, okay, how do I de-risk it so I don't have to have these thoughts in the middle of the night? That monkey brain can go to sleep. And how can I get excited about the sell-off? Change that. You've changed everything.
I want to ask you about how this framework gets affected by potential political uncertainty. And the reason I we could talk about what happened at the debate. We're two guys that are on the outside of the US. Well, I mean, I know you're in Miami right now, but I'm up in Canada, you're on the Cayman Islands, and you have a lot of history in Europe. So you're not Native American. But looking at what's been happening, there's a lot at stake, and that can affect a lot of potential policy, especially even around crypto right now. How do you manage what you're seeing in there? It feels to me like this whole fourth turning thing is just being accelerated right now in politics. How do you view what we're seeing right now, and how does that get applied to that framework that you have?
Yeah, it's really interesting. I kind of zoom out. So anything about crypto and regulation, everything else, I just see as the fight of the generations that has to happen. And that's all part of the fourth turning.
Mm-hmm.
I see the inability for institutions to deal with the technology. So AI, they've got no chance of trying to regulate this thing in any meaningful way, particularly because these are all distributed systems. They're everywhere and nowhere. They have no chance. So I see that, and Neil Howe talked about a need for new institutions and infrastructure. Well, that's clear. I see the rise of populism, which is really different people blaming the others for the issue of the debt and the fact that there was too many baby boomers and they've all had kids. So there's too many people in the workforce, wages never went up, then the debasement happened, and they're just blaming each other, but they were actually the problem, which is weird, and weird to realize that. And I don't think that goes away until technology takes over. But then we've got the whole fear of technology. We think the blockchain fear has been big. I mean, Christ, what? I mean, that's about maybe a new system of money and otherwise a different use of the internet. It's hardly a big deal versus the existential crisis of humanity. But we're going to face that one too. And I think we will split into two tribes. And it's not the left and right tribe, although it is kind of partly divided on those lines. It's the accelerationists and the decelerationist. It's those who are going to merge with the technology to use it as much as possible, and those who want to stay away from it. And, there is a philosophical level, a realistic level. We end up becoming two different species.
The biohackers and all of that going into that. And
yeah, I mean, there's whatever it may be, we are merging with the machines. Look at Neuralink, pacemakers. We've had technology in our bodies for a long time, but we'll accelerate it to enhance our longevity and our abilities, our cognitive abilities, our physical abilities, our genetic abilities. And there'll be people who don't want that. So you're going to have a bunch of people who are super powerful, super smart, living forever, and a bunch of people who don't want that. Well, it's like Neanderthal man versus Homo sapiens. Those coexisted for a while until they didn't. So we've got a lot still to go in all of that. I mean, there's no period of harmony in any of this. There's never going to be. There's too much change. Humans aren't very harmonious when the rate of change isn't. So, even me, how I thought about this again is I can either sit there worrying at night about all of this, or I can just invest in it. And then it doesn't matter. I can go over to my house in Little Cayman, an island of 140 people, where the robots probably aren't coming. I say that now, and I've got one of those robot vacuum cleaners, but so maybe I'm fooling myself, but I kind of think that little island doesn't get touched, and I can exist in both worlds.
That's how I feel out here in the Canadian mountains too, is that I have my serenity and then I can get online and see what the hell's going on.
Well, I just think nature trades at a premium.
Yeah.
If we're living more and more of our lives like this, online, nature is a really powerful balancing force. And I think it's a premium experience. So, I mean, I love what you're doing. I made those same lifestyle choices. I went to Spain, Cayman Islands. It's exactly the same thing as you're doing. It's like, if I'm lucky enough to able to be liberated in where I live, why don't I live in the place with the best quality of life for me? And that's it. It's brilliant.
Yeah, totally. Awesome, Raoul. Well, I can't thank you enough for coming over to the Blockworks side of things. I love everything you do and what you're doing at Real Vision and all of that. But any last thoughts there before we head off?
Look, again, I'm going to say, I know the banana zone is everybody's hopes and dreams. We're all in it together. Just have patience. Don't push it. Just, it's summer. Maybe go on holiday. Touch some grass, touch some sand, see some friends, see some family. And by the time you come back refreshed, things will be kicking off.
Yeah, agreed. Go enjoy the summer. All right.
Yeah. I really enjoyed it. So thank you for having me on.
Yeah, appreciate it. And hope that hurricane misses your house.
Yeah, me too.
Jesus. All right. Thanks.
Make large crypto trades with Kraken OTC. Execute orders of more than 100,000 off the open exchange through our premium OTC trading service. Get 24/7 access to deep liquidity, minimal slippage, and competitive execution and settlement services. Private and secure trading options include chatting securely with our trade desk for a personalized high-touch service, or use our self-service RFQ for super fast, automated OTC trading. Non-investment advice. Crypto trading involves risk of loss and is offered to U.S. customers through Payward Interactive Inc. For more information, go to realvision.com/Kraken OTC.
We hope you enjoyed the video. At Real Vision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.